And then if you looked at the very nicely explained the emerging trends in the logistic industry, it invites for this company to adapt to value chain. Now you can see the diagram. So this diagram very nicely explains how to use AI, blockchain, even other computer or digital aided facilities to restructure the business model, what you're going to have it for international business.
Referring to the second part.
Second part, you can see the second part of this. Now look at the starting point. It is not the typical inbound logistic, the primary part. Start the primary chain, product development and acquisition. How do you do that? No need to have our own inbound logistic, our own money involved for the acquiring the resources and all.
This is anyway traditional quarters.
No, this is something goes with the new approach now.
Okay. So there it talks about, usually we just start with inbound logistics.
Inbound.
Here you talk about
product development. How you do product development? Let's see. Now they acquired e-commerce platform company.
Yeah.
So they acquire the customer first. This is not the traditional process pull strategy. This is demand pull strategy. Look at the demand first. Acquire the customer.
We could have expected a little more responsibility and proactiveness, right? So which leads, and when you're going through certain comments from the board of director finance, I don't see that weight coming. It only says, if you refer to page 14, foreign exchange management, monitoring forex movements and advising on forward contracts. Now, see, your operational expenses is a fatty layer of 30 to 40%. And surely you need to have more sense, process, planning into that area which constitute about larger portion of your OPEXs, right? Now, when you look at certain companies who are already in the business, which are large operations, we don't have to go globally, right? Let's look at certain companies which has been mentioned here. Now, how they are managing the foreign exchange is surely through different option mechanisms like forward contracts, options, and also they would also sometimes have swaps.
It all connects with strategy, and I explained that strategy has to be governed. That's where the governance comes, and then you need to assess risk and measure what matters in measuring, and that is how IFRS S1, the base standard, has these 4 components which you can see. The governance, totally from a corporate governance perspective, is there a need for a ESG committee? At a board level, IFRS S1 asks about 5 tough questions from the board. What is the board structure? How board is going to get information about emissions? SRRO, sustainability related risk and opportunity, whether board has the knowledge, whether it is connected to board, the emission, for example, managing your scope 1, 2, 3, and if you have a net zero target, are those connected to board remuneration? Those tough questions are there under governance, right? Whatever I mentioned, see here, is it part of the board terms of reference? Do they have the skill? Are they meeting to discuss these matters? Are they connecting SRRO? If you don't know about SRRO, we cannot talk about sustainability related risk and opportunity. Again, in 1 minute, the SRROs are those that's going to impact the financial prospects of the company, right? So that is access to cash, right? Likewise, how you connect with the financial statements from a risk perspective, and then we have one standard which is S2.
Yeah, so the thing is, if there is acquisition, then a student should first evaluate the transaction. Then for the each and every angle, a student should know what has happened. Then they should have the clarity what the company has done or they are going to do. Then on that perspective, then first they need to look at if there is a company is going to acquire another company, then what's the way of financing. Then that's one of the major decision which amalgamating with the other core subjects, then that is visible. The options it has given. Based on that particular options, then students need to evaluate or analyze or discuss what are the tax implications on this each way of financing. It may be the equity financing, it may be take the free cash, it may be the debt financing.